want to know what these 7 fundamental steps are to open a trading position correctly. Stay tuned with me. Greetings, friends. I hope you're doing great. In a video, I explained the 7 fundamental steps to becoming a professional trader. And now it's time for me to explain how to correctly open a trading position. Step 1. Before entering a trading position, before diving into a day of trading and trading activities, you must first examine yourself psychologically and mentally. In the journaling we're doing, there's a psychological section, and you need to analyze all your mental states to see if you're in the best mental and emotional state to enter a trade on that day or not. So the first step can be very important. Step 2, you should analyze the chart with a rule-based analytical approach, not pattern-based, indicator-based, or oscillator-based approaches. In fact, you should have learned a rule-based analytical method with proper training to identify the ranges where you can risk and wait for them to be tested. So the second step would be determining the ranges. You analyze in a calm environment with high concentration and identify the ranges you are going to risk. In the third step, there's a term called price approach, or PA. Basically, it means getting confirmation to enter a trade, confirming how the price is approaching the desired range and how it's moving towards it. There are some techniques that we will teach in detail in the future about where the price is coming from, how it's moving, and where it's supposed to go. And PA will be our third step. The next step is managing emotions. You need to steer clear of fear, greed, excessive excitement, and even low risk tolerance. There are some techniques that we discuss in the psychology of trading workshops. So the fourth step for us is trading psychology. But the fifth step, you need to do capital management. What does capital management mean? It means that you determine the volume of the trade based on your entry ranges, stop loss, and TP, considering your margin and existing formulas. The standard risk is between 1 to 2%, and we will thoroughly discuss this topic in our educational materials. The next step, after all the previous steps are done, you will enter the sixth step, where you will easily enter the trade without stress by choosing the appropriate type of order, which we will discuss in detail in the future. And now, when you enter the trade, the final step is managing this trading position. You've examined all the conditions. Now you need to see how it will hit your target. There are some techniques and patterns that you should use, such as moving your stop loss after hitting the first target or breaking even. In general, there are some points regarding position management that we will also discuss. I hope this video has been helpful for you. Don't forget to subscribe so we can learn the fundamental skills mentioned professionally together.